Today on the Roxom Report London, analysts warn Bitcoin could be primed for a price drop. The Bank of England is proposing new restrictions on digital assets. 16 billion passwords have been leaked in the largest data breach on record. And Visa is pushing further into the stablecoin business. All that, plus we're talking with Freddie New from Bitcoin Policy UK, live right here on the Roxom Report. Our guest today is Freddie New, a thought leader at the intersection of finance, technology, and digital innovation. Freddie is the head of policy at Bitcoin Policy UK, an independent organisation that helps shape the conversation around Bitcoin and digital assets in the UK. His work involves engaging with policymakers, regulators, and industry stakeholders to promote evidence-based, balanced approaches to Bitcoin regulation, particularly as the UK positions itself as a hub for financial innovation. He's also the general counsel at the Little Car Company, a company that builds beautifully engineered electric junior cars. With deep experience across crypto, fintech, and corporate innovation, Freddie brings a clear-eyed, policy-driven perspective to one of the most fast-moving and misunderstood areas in finance. Freddie, welcome to the show.
Thank you very much, Amy. I'm astonished to have such a nice intro. Thank you very much for putting that together.
Oh, my pleasure. You're pretty impressive. How's it going today? How are you doing?
Good, thank you. I mean, as normal, jumping between lots of different stools. As you
Yeah.
will have heard from the intro, I wear a number of different hats, and not all of them stay on the head for a terribly long period of time.
Yeah, it must be hard juggling, balancing all of that. Appreciate your time. So first, when we kind of speaking with a new guest, I like to kind of get a little bit more information and find out how you discovered how you discovered your Bitcoin, how you discovered Bitcoin, and what was your orange pill moment?
Yeah, it's an interesting question. I tend to think of it not so much as a moment as a process. So, like a lot of people, I came across Bitcoin several times before I actually paid any attention to it. And because of that, I have obviously the deep regret that most Bitcoiners feel for not having understood it earlier.
Me included.
Uh, yeah, really?
Real FOMO.
Yeah, exactly. So my first touch point was actually during the probably the tail end of the Great Financial Crisis. I was working in still in law back at that time, and it was during the Cypriot banking crisis, 2013. And if you remember, or if anyone knows very much about what happened then, essentially the Cypriot government uh, fundamentally confiscated amounts of money that were held by depositors above a certain level
Mm.
in Cypriot banks. And it was around about that time that I remember reading an article somewhere that went into the censorship resistance of the Bitcoin system, and how that kind of confiscation wouldn't have been possible
Mm.
had people been keeping their money in Bitcoin, which of course no one was at the time. So I read a bit about it, thought this sounds interesting, then forgot about it for another couple of years, and then tangentially came at it through hardware, actually building computers, which I used to do for fun, and then again, still not understanding it properly. Thought I would have a shot at mining. Didn't know what I was doing either. Thought I could GPU mine, not realizing or knowing anything about ASICs at all. And I think lost a reasonable amount of money on electricity costs, didn't really mine any Bitcoin. And to my shame, I don't actually know where that wallet is. But I started running a node. And that was so probably my biggest takeaway was learning how Bitcoin Core worked and how the system worked a little bit better. And then of course in 2017 when it became much more mainstream, that was when Bitcoin, I remember that. Let me look into that again. So yeah, as I
Mm.
say, not so much a moment as a process.
It seems like that's the way with a lot of people. It takes a few touchstones. I like your willingness to explore and try and figure it out, even if you don't have a clue. That was the thing that kind of held me back, was not knowing. So just being like, oh, forget about it. But it's nice that you dabbled.
It's
Even
Yeah, it's nice being a tinkerer. I try to
yes,
encourage that with my children. I like taking stuff apart.
yeah,
Actually, we get kind of excited when something breaks, and we can then take it apart legitimately without worrying about it. But
yeah, yeah.
yeah, but not everyone's like that. So
True. Could you tell us a bit about the work that you do with Bitcoin Policy UK? Sort of like on a day-to-day. I mean, I'm sure you don't get to do 8 hours a day on it every day, but yeah, what are you doing on
No,
it?
sadly, I don't get to do 8 hours on it. So the organisation is led by Susie Violet Ward, whom you know, and who's going to be working alongside you, which is great. She and I and one other co-founded the company 2.5 years ago or so, really because we realised that although there was a lot of crypto, Web3, stablecoin, altcoin lobbying happening in the UK, there wasn't really a comparable organisation doing that same work just for Bitcoin. And so we were set up with the specific aim of making sure that that Bitcoin only voice was heard in the room, and that policymakers came to understand that there are many different types of crypto assets and there are significant differences between them. They each do different things, and lumping Bitcoin in with everything else is the incorrect way of thinking about it.
Hmm.
Um, and Susie and I have sort of divided the work of the advocacy group into sort of three broad areas. One of which focuses on policy, law, and regulation, and contact points with decision makers, MPs, regulators. I head up that team. There's the mining and energy team. Susie originally led that before she made the step up to CEO, and the focus there is really trying to also to engage with policymakers, but in the sense that a lot of them fail to understand, I think, at the moment how Bitcoin mining as an industry can actually integrate with things like our existing electricity grid, how
Hmm.
useful it is as a demand response buyer of power for our renewable energy grid, and how, as an industry, it can present interesting opportunities around heat recycling, for
Hmm. Hmm.
example. And then the third limb of the group is educational. And in that context, we work with partners such as Jordan Walker at the Bitcoin Collective, and also various teachers in schools, actually.
Mm.
So, two of our teachers run the Mi Premier Bitcoin diploma within their schools. One of them has a slightly greater focus on the hardware side of things. So, we have over time received donations to buy old miners. Some people have donated miners to us.
Mm.
Those, in many cases, are now actually in schools being taken apart. Kids are being taught how mining works, and so I suppose there's a bit of a crossover there between sort of financial education and a bit of engineering as well, and also some computer science.
That's fantastic. I was going to ask what have been some of the wins that you've found with the Bitcoin Policy UK, and that sounds like one, getting things like that into schools and having kids learning about it and working on it
Yeah,
and
I agree.
future gains.
And it's rather a nice one. It's probably a less obvious one. But, I feel in many cases what we're working on here is a very long term project.
Hmm.
There's a famous quote. I think it's by Max Planck, which says that new ideas do not triumph because people change their minds. They triumph because people who believe the old ideas eventually die and are replaced by new ones. So, not that I would wish for the old, stale, pale central bankers among us to pass on, but that may inevitably be what happens. Um,
Yes.
so yeah, I definitely cite that as one of the wins. Maybe two other ones that are relatively recent. So we have been pushing for a long time for Parliament to recognise a recommendation in the Law Commission's report, effectively legitimising Bitcoin as a type of property. There is actually a piece of legislation. I checked this morning. Actually, it's currently in committee, so it has its progress through the Lords and the Commons is going reasonably well. It is a new piece of legislation which specifically recognises that digital assets, within which they include Bitcoin, are a new type of property, and also should be capable of being protected with the full force of the law, as are all other types of property currently recognised by the law, because our law currently doesn't recognise them. If
Mm.
our law can't really define them properly, so
Mm.
that's a rather geeky piece
Hmm.
of legislation, but something that we're very pleased finally seems to be coming through. I think the first time I mentioned we started advocating that was about 2 years ago, and then the second piece, the second minor win I'd have said is the FCA has obviously historically been very anti access for retail investors to purchase exchange traded products which give exposure to Bitcoin and to crypto. And they have finally relented. They are going to allow ETN, not ETF. So there's a difference, obviously, between exchange traded funds and exchange traded notes. They put a ban in place late 2020, which became effective in January 2021, which stopped all retail investors from having any exposure to exchange traded products. They are now in the process of consulting to lift that. I'd say that two things: the ban's not effective yet. Sorry, the lifting the ban's not effective yet, and it's only for ETNs, not ETFs. But it's a step in the right direction, and it's something we've been harassing them about for a long time. So they are probably sick of hearing my voice.
Congratulations. It's incredible what you're doing. And I would hope that with more awareness, there comes more support, because it's a volunteer organization, and what you're doing is beneficial to so many people. Yeah, be great to see you get some more support there. Back to the point that you made about getting Bitcoin classified as property. Does that have anything to do? Yesterday we talked about a story in Nauru. It's this island off Australia, I believe, and they wanted to legalize Bitcoin and sort of try and get investment into Bitcoin into the country, which is like a population of about 13,000 people. And they had, Anton, our producer in the cloud, could you tell me if I'm correct on this? They wanted to classify it as a security rather than an equity. Was that it? Or was it the other way around, an equity rather than a security? Anton's just double checking. But could you tell me, so when you had said about classifying it as property, that means that if it is stolen, then who it belonged to could recover it? Like, tell me about that. Or is it to do with this security versus equity? Could you help explain that a little bit?
It's actually probably, if I had to unpack it, it's really neither of those two things. So
Okay.
I appreciate this is not a law show, but just in terms, a slight segue on how the English law looks at property. There are two types of property under English law that are recognised. They use rather old-fashioned sort of medieval French terms to describe them. One is a chosen possession. So, like, I'm holding a pen right here. This is a physical thing that I
Chattel?
can hold,
Mm-hmm.
and that's called a chosen possession, or a thing in
Mm.
possession.
Okay.
And then the law also recognizes, I suppose, rights-based pieces of property, and those are things like a contract or a debt. So if you lend me £10 and we record that in a loan document, then I have a right then to sue you for recovery of that £10 if you fail to pay.
Mm-hmm.
And so that right to sue you for the money is a form of property, and I can actually sell that. So I could sell
Mm.
that. I could sell my right to sue you to another party, who would then have the right to sue you for that £10,
Got it.
and that's fundamentally how debt trading works in the broader market. Now, the interesting thing about Bitcoin is, obviously, it's not it's not a physical thing, so I can't give it to you, and it's also not a right either. And I think most legal systems would recognize that, and that's one of the reasons why Bitcoin was never considered a security by the SEC in the United States, for example,
Mm.
because a security is normally a type of paper, should we say, that's issued. Let's say a company can issue equity securities or debt securities. An equity security is a share in the company that gives the holder certain rights as regards the company. So, for example, if you buy a share in Apple, you can technically vote at its shareholder meeting.
Mm-hmm.
You might have the right to dividends. You can sell that share yourself. You can pledge that share as security, and you can do all kinds of things with it, even though it's an intangible piece of rights-based property. And a company may also issue debt securities, like notes, loan notes, or something like that. And those are typically more akin to the £10 debt that I was talking about earlier.
Mm-hmm.
Now, obviously, again, Bitcoin it's not rights-based at all. If you have a Bitcoin, you essentially have you have a portion of the network that's, completely immutable and is absolutely your property, provided that you control the private key. So in that sense, it's more akin to a bearer instrument, but it's no one's liability. So it's not a debt. It doesn't give you a voting share in how the network functions. So it's arguably it's completely distinct from something like a proof of stake token, where
Mm.
the more tokens you have, the greater say you have over how the network behaves and how the rules are made. So it's rather an it basically fell between the two stools that legally that the law had divided property into,
Can
and
I
the law
ask what
commission
money, what
sorry.
money, can I just to jump in there, can I ask what money would be then of those two? How is that legally classified, and would Bitcoin then be in that same category as pounds?
Oh, that's a fantastic question. It I don't think it would, technically speaking, because
Mm,
in fact, all modern money is a liability.
okay.
So where we were talking about debts, so again, going back to our £10 example, so a banknote is a liability of the central bank, and that's why written on. Actually, I think I've got some here. So let me see. Written on a banknote, there should be. I promise to pay the bearer on demand. Yeah, here we are. I promise to pay the bearer on demand the sum of £10.
Hmm.
So that's written on all of our banknotes. So it's clear that it's clear on the face of it. This is a debt. And back in the day,
Interesting.
when our money was backed by anything, you could literally exchange that for £10 worth of sterling silver, and that's where sterling, the word sterling, comes from.
Interesting.
Um, and if so, that's central bank money. Commercial bank money, most modern money in the monetary system is actually created when banks make loans.
Mm,
So if you're taking out a mortgage and you put a deposit down for, let's say, 100K, and you borrow 900,000 from the bank hasn't taken that 900,000 from other depositors and lent it to you. It's created that money from nothing.
mm,
And when it credits that into your account, that money is then a liability that you owe to the bank.
mm,
But if it was cash, then that's a liability the bank owes to you. So if you go to the bank, you should technically be able to withdraw that liability from the bank. So to answer your question,
mm.
all modern money is a liability.
Interesting.
It depends whether it's a liability of a commercial bank, a central bank, or of you.
So I guess my next question is, so then how did you get get Bitcoin recognized? Was there like was a new term created for property for Bitcoin, or?
It's rather cleverly done in the legislation, actually. So it's a sort of a typical piece of English law drafting. It's one of the few things that we're still good at in the UK. It's the legislation. I recommend people read it. Actually, it's very short. The legislation simply says that a thing shall not be excluded from being property by virtue of being neither a shows in possession nor a shows in action. So,
Nice, a
in other words,
catch-all
it's
for everything else.
yeah.
Perfect. Congrats. I'm actually studying law at BPP, which I saw you had
Oh,
done too. And so, yeah, I find this all very fascinating.
oh, that's hilarious. I didn't know.
Yes.
Which location are you at?
I'm doing it online. I've been doing it online part-time since September 2023 when I was living in the States. And yeah, I did the law conversion. And then now I'm studying the SQE preparation course. For anyone out there, that's the kind of solicitor's qualifying exam prep. It's changed a little bit. I think you did the LPC.
Yes, I
Um,
did.
so yeah, things are a bit different, but I'm not sure. I find it fascinating. I love it. I'm looking forward to getting the masters. I'm not sure whether I'm going to pursue it at this time. I'm quite enjoying still entertainment and acting and things like that. But it's a nice thing to have in my
Mm.
pocket if I do decide to pursue that. And just the knowledge. I think knowledge is power, and I find it fascinating understanding how law. I didn't know how government worked before. I didn't really understand how law worked before, and so it's just I find it really helpful. Um,
Yeah,
in life, just
definitely.
to know
Well,
these things.
I'm sorry, I was just sort of preaching to the converted when I was bumbling on about property
No,
law then.
no. Well, it's
Um,
helpful for anybody else that might not know that, and I do need things to be broken down still too. I'm not, I'm not an expert by any stretch. Excellent. Okay, well, thank you for that. Let's get into some news, shall we? Oh, actually, first we're going to cut to a quick commercial break, and then we'll get to the news. We'll be right back.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
Welcome back. First up, we're diving into the biggest Bitcoin story making waves today. This is Top of the Block.
Okay.
Bitcoin is holding steady above 104,500. Even with rising tensions in the Middle East, the market has barely moved. Over the past week, Bitcoin is down just 2%. But behind the scenes, there's a lot of debate about what this quiet period really means. Three major reports by CryptoQuant, Glassnode, and Flowdesk all describe the same picture: low volatility, tight price movements, and less activity on the Bitcoin network. Retail traders, the everyday investors, have stepped back. Meanwhile, large players like investment funds and so-called whales are now driving most of the market. CryptoQuant, which monitors blockchain activity, is raising the loudest alarm. In their latest report, they say Bitcoin could fall to 92,000 or even as low as 81,000 if demand keeps falling. They note that spot demand, meaning buying Bitcoin directly, is up, but still far below normal. Exchange-traded fund flows have dropped by over 60% since April. And whale accumulation, when major holders buy more, has been cut in half. Their demand momentum indicator, which tracks overall buying strength, is now at a record low. But Glassnode sees the same data and reads it differently. They call the Bitcoin network quiet, but not weak. Instead, it may show maturity. Transaction volume is now focused on large transfers, likely from institutions. And the derivatives market, where people trade Bitcoin futures and options, is now up to 16 times larger than spot trading. Flowdesk, a trading firm, offers a more neutral take. They say the market looks coiled, meaning a big move could be coming. Not necessarily down, not necessarily up. So, what does this all mean for the price of Bitcoin? Right now, the balance between big money confidence and falling retail demand is creating a pressure point. If demand bounces back, Bitcoin could rally, but if it drops further, the price may tumble. Either way, the next move could be big. Okay, Freddie, do you have any predictions about what might happen next with the price of Bitcoin?
The facetious one, which is that Bitcoin always does what no one is expecting. So I think you should always position yourself accordingly. Weirdly, although I help to run a Bitcoin institution, we don't tend to focus or think about the price very much at all. So perhaps coming at this from a slight tangent, our focus is very much on the properties of Bitcoin other than its price. So things like its censorship resistance, the independence of the network, what the hash rate is, how many nodes there are. So how robust is the system to perform its fundamental purpose, which effectively is withstanding a nation state attack. And that for me is the privacy we'll talk about later in the session, also important. But for me, the censorship resistance properties of Bitcoin always outweigh either the price or its slightly imperfect privacy. However, having said that, on price, one comment is that I do think we are in an odd historic period for Bitcoin, which none of us have really seen before. At a similar point in the last cycle, there were no ETFs I believe there may be one or two, but not in any of the large, well-capitalized jurisdictions. And there weren't really any Bitcoin treasury companies. MicroStrategy had begun making some purchases, but nothing like they're doing now. And there wasn't the huge proliferation of Bitcoin treasury companies that we're seeing now, which may go some way towards, I think, explaining the lack of activity on chain. As you said in your intro, if a lot of the activity is these very large buys, we're getting more into a world similar to the one that Hal Finney described in his very famous, very early post on Bitcoin Talk, which I'm sure you've read. He posited that at some point in the future, we might have large institutions that were effectively Bitcoin banks, and they would make very few large settlements on chain, essentially settling between themselves. And he postulated that they might issue eCash backed by the Bitcoin they held in their treasuries. It's really interesting to go back and to read that prediction, which I think is 12 or 13 years old now, and then map that against what we're seeing with increasing institutional demand and probably still relatively low retail demand.
Yeah, we were talking about this the other day. With MicroStrategy, just buying at every opportunity, I think they hold 3% of all the Bitcoin that will ever exist now. And I wondered what the end goal was, and perhaps it is something like that, to become a major holder. And What do you think that means for the average person, the average retail investor or user of Bitcoin, if there are just a few major players a few years down the line?
You should probably break it down considering where people are and what they're using Bitcoin for.
Mm,
So obviously, typically in the sort of highly developed, financialized countries that we would ordinarily talk about, UK, US, Europe, Bitcoin is often used simply as an investment vehicle, as a financial instrument. If, on the other hand, you're living in a country whose currency is rapidly collapsing, maybe you're swapping your local fiat into Bitcoin and only spending it in small amounts when you need to.
hmm
Thirdly, maybe you're a dissident or an activist who is relying on Bitcoin to continue your work in a country that has shut your bank accounts, or where the financial infrastructure has collapsed because of some external or internal shock, like a war, and maybe you just need Bitcoin to keep working as a payment solution for you.
hmm
So I think the answer to that question really depends on who you are and what kind of user you are.
mm,
For us sitting comfortably in the UK, most people who buy Bitcoin honestly will be doing it for the price
mm,
appreciation.
hmm
But if you are in a country whose currency is inflating by 50 to 70% a year, perhaps you're just doing it so as not to see the value of your paycheck evaporate before you get to spend it.
Right.
So I think it's always important to consider the different types of purpose that you might be wanting to use it for.
So say, I don't know, 15 years from now, and most of it is held with these big institutional, I don't know, Bitcoin banks almost. Um, for somebody who's an investor, how will that really impact them?
I mean, part of me, it's interesting you say that. Part of me worries that it may already be too late for most retail people to get exposure to on-chain Bitcoin.
Mm,
I forget what the I forget what the actual numbers are, but we already know that there's a likely upper limit on how many people will ever be able to transact on chain, simply because of the block size and block regularity. And it's not a very high number at all. So, in reality, in order to scale this as a payment or a saving system to the rest of the world, we are going to need to rely on second layer solutions, whether those are Lightning or Arc or eCash or a combination of all of those.
mm,
Personally, I think a combination of all of them is likelier than not to happen.
hmm
And I think you come at some point, you come up against the physics of it, that the transaction throughput on the base layer will always, I think, be relatively limited, and that's fine, because we should compare the base layer to giant settlements between central banks. That's what it's essentially, in
mm,
my view, going to replace at some point.
hmm
And you will, like as Hal said, you will likely see eCash tokens pegged to amounts of value on the base layer, traded between financial institutions or peer to peer. If you're
mm,
familiar with the Cashew wallet, for example, developed by Cali, or Minibits, or Fedimint, which is another brilliant solution. Those are all Lightning based eCash solutions, which are self custodial or collaborative custodial,
mm,
and they work perfectly well as Lightning solutions. The Albi Go wallet is another great example. You can run your own Albi instance on your own node, and you can transact self custodially using Lightning today. And
mm,
those kind of solutions are fantastic, and they also involve relatively few base layer transactions. And I think perhaps the main takeaway here is that if Bitcoin was going to be successful, I'm afraid it was always going to be adopted by big financial institutions and ultimately by
mm,
nation states as well.
hmm
Something
hmm
that big and something that important has had quite a good run at being ignored by major players. But I think
Yeah.
the time of certainly sensible countries, unlike the United Kingdom, which is determined to keep ignoring this till the cows come home, sensible countries, I think, are now paying attention.
Yeah, they really are. There's, as we get into the show a little bit more, I do want to chat with you about sort of regulations and, banks and governments getting involved. So we'll touch on this again. We're going to take another short break and we'll be back with a look at the market.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
Welcome back, everyone. We decided to skip the market watch and go straight to the global gist so we can have some more discussions with our fantastic guest, Freddie New. So the global gist is your quick spin, excuse me, through the top stories shaping finance, tech, and the digital asset world. So let's get into it. The Bank of England confirmed it will propose new rules for how banks handle crypto by 2026, and these rules are expected to be restrictive. David Bailey, the bank's executive director of prudential policy, said the UK wants banks to keep their crypto exposure low, particularly when it comes to volatile assets that carry a high risk of loss. The UK is not acting alone. It is aligning with the Basel Committee on Banking Supervision, the global standard setter for financial regulation. Now, I think it's the Basel framework, suggests banks should limit their exposure to high-risk crypto assets such as Bitcoin to just 1% of their core capital. The UK has stated that its approach will be informed by this guidance. This move follows events in 2023 when banks like Silicon Valley Bank and Silvergate Bank collapsed, partly due to their exposure to crypto markets. Since then, regulators have been working to prevent similar risks within the traditional banking system. While the UK has expressed interest in becoming a global centre for digital assets, regulators are balancing innovation with financial stability. The Financial Conduct Authority is currently rolling out a new framework for crypto firms, while the Bank of England is focused on limiting potential threats to the broader financial system. These proposed rules are not aimed at banning crypto, but are intended to manage risk. They reflect a broader trend among global regulators to integrate digital assets into existing financial oversight. In terms of market impact, restrictions on how much crypto banks can hold may reduce institutional demand, which could place some pressure on Bitcoin's price in the short term. However, the establishment of clear rules may also support long-term confidence in the sector and create a more stable environment for future growth. Okay, Freddie, what do you make of this announcement? Do you think banks should limit their exposure to assets like Bitcoin to just 1% of their core capital?
Well, I'm kind of more positive about this than I thought I was going to be, because obviously 1% is bigger than 0%, which is the I think the Bank of England's preferred position for banks to hold. So, to my mind, this is actually a step in the right direction. And once you've permitted banks to hold 1% of their core capital in cryptocurrency or in Bitcoin, then a move to 2 or 3% is simply one of mathematics rather than principle. So my general takeaway from this is that it is increasing evidence of there being a greater understanding that these are legitimate financial assets that do belong within a bank's core capital, albeit at a relatively low level. So I'm actually more of a positive frame of mind about this than I think many other commentators might be. And another point to make, I think, is that you know a lot of the messaging we hear out of these financial institutions is that these assets are incredibly risky, but risk is not a bad thing. Risk is something that needs to be assessed and managed, and you'll be familiar with the term risk tolerance. You decide how much risk you can tolerate and how you want to maximize your returns based on your capacity for risk and your risk tolerance. This is why banks have risk management teams, and it's why that if you're looking for greater returns, you might, and you'll probably do this yourself with your pensions or your savings, you'll be asked when you set up a pension, what's your appetite for risk? Do you want to go for high risk, high return, or do you want to take a very measured and sensible approach to risk? And I might also drag in some of the work that was recently done by Cartwright, the pensions advisory firm in the UK. They modelled a great many different scenarios for pension funds who might be looking to add some Bitcoin exposure to pension portfolios, and they came out with a similar level to this actually. If you want to dip your toe in the water as a pension fund, an allocation of between 1 to 3% it seems fairly sensible. And that makes more sense when you think about it in terms of downside. So let's say there's a total, the unthinkable happens, and the Bitcoin system literally stops functioning and it absolutely dies, which the likelihood, so the probability of which I think is extraordinarily low. So you've got a very low probability but high damage scenario. So the risk of that is that you lose the whole of your capital, which if you are only holding 1% is you've lost 1% of your total core capital. And bear in mind that that would be a large amount because the core capital of these banks is gigantic. But so your total downside exposure is 1%. But that you're talking about a very, very low probability event there. And then if you map the probabilities of anything other than that happening, and this is where I wish I was better at mathematics, because this is my wife's a very, very skilled mathematician, and she would get excited by this kind of stuff. If you're then talking about much higher probabilities of much lower risk outcomes with much higher reward. So by which I mean the probability of Bitcoin not completely failing is much, much higher than the probability of it actually completely failing. So your likelihood of achieving a return on your 1% of core capital, simply in terms of value appreciation, is much, much higher than your probability of a total wipeout. And banks have got very, very highly skilled teams who will be able to do the mathematics on this and work out all of these different models. And they may over time decide that, if that 1% of their core capital appreciates as we think it will over the next 4 to 8, to 12 years, perhaps they want a higher level of exposure. So two points really. Firstly, simply allowing banks to hold the assets and to include it is a good thing. And I think it's a step towards you potentially being able to get into a scenario more like Xapo Bank, actually, whom I believe one of your sponsors, and I know the team there. I think they offer a great product. They are real trailblazers in the space of being able to manage your fiat money and your Bitcoin in one place if you want to do that. And I think they've kind of cornered the market at the moment. So the extent that there's, and I'm a believer in nice commercial competition, to the extent that we see more competition, that's great. Xapo are doing a fantastic job at the moment. So core takeaway there is, if banks are holding the asset at all, then that's a good thing. And then secondly is, don't be afraid of risk, understand it, work out what your tolerance is and how to manage it, and the banks will have teams doing that.
Absolutely. Great point. So it's a win. It's progress for the in the UK. I'm going to move on to the next story because I'm definitely curious to get your take on this. But I could talk to you about that all day too. Okay. Am I going to left cam? I think I am. A major data breach has just been uncovered, possibly the largest breach ever. Security researchers have found 30 databases containing a total of 16 billion stolen records. That number is almost 3 times the number of people connected to the internet. Now, these records include information from services like Google, Apple, GitHub, Telegram, and various VPNs. Some of these databases are small, just a few million entries. Others are massive, with billions of records each. According to the research team at Cybernews, these records were likely collected by cybercriminals using info-stealer malware. That's software designed to quietly steal personal data from your device, like passwords, logins, or browsing history. Some of the data may also have come from security researchers or ethical hackers. Only one of the 30 databases had been reported before. That one contained 184 million records, but the team says that barely scratches the surface. They claim new data leaks like this are appearing every few weeks. The databases were available online only for a short time before being locked down. It's still unclear who owns them. And because many accounts may appear in more than one database, we don't know exactly how many people were affected. Researchers say unprotected databases continue to be the top cause of data leaks. Too many companies still don't understand how to properly secure their systems, especially when using cloud services. Meanwhile, criminals are making the most out of it. The stolen data can be used to run phishing scams, where fake emails or texts trick you into handing over even more information. It can also lead to identity theft, fraud, and ransomware attacks. Events like this often increase demand for secure, decentralized technologies. And that's one reason Bitcoin which doesn't rely on traditional identity systems, can attract attention during major security breaches. Okay, Freddie, what do you make of this data breach, and any thoughts on what people can do to protect themselves? It's massive.
Well, yes, that goes without saying. And the first thing to say is it's both awful and depressingly predictable at the same
Yeah.
time, unfortunately. I think as an abiding principle, we should all be aware that anything you ever put online or give to a third party, whether that is a corporate or a government, is probably going to end up on the internet and for sale. So work on the assumption that you have no privacy and all your data is going to be public, and you should take steps to protect yourself using that as your basic assumption,
Any
which is a
tips
depressing state of
there?
affairs for all of us.
It really is. Yeah. Are there any sort of checklist tips? I mean, I know that I had gone through and removed my details from databases that were online. That was shocking that my information was just out there online for anybody to Google. But yeah, any tips?
Yeah, there used to be a good website. I think it was called Punked, which and you could put in your email address. Actually, it was probably another data gathering service, wasn't it? So you put in your email address, and then
And that
it
was
would
their
tell
joke.
you
You were
whether or
punked.
not you're punked. And there are services that will sort of scrub your data that has been sold legitimately. For example, when you click through to accept terms and conditions, there'll often be a hidden term that allows that institution then to bundle up and sell your data on someone else.
Hmm.
Uh, the key worries, I think, are probably two pieces of good practice. Firstly, never ever click on any link that you receive in an email. Absolutely, do not click on it. Go to your browser. If you want to visit the particular website, type it in yourself. Almost all of those emails are likely to be phishing. And an easy way of finding it, most people will know this anyway, if you hover your cursor over the email that it was sent from, or look at the drop down menu so you can see the full domain name that it was sent from, very often those will obviously not be correct. They may contain spelling mistakes. They may look very much like the legitimate institution that's sending you an email, but will have a couple of the letters changed. So live your life in perpetual suspicion. Phone calls as well. I now never accept a phone call from a number I don't already recognize. So use a lot of phones will have phone screening now. I use that all the time. I will absolutely not respond to any unsolicited messages on Telegram or on SMS. If I've ignored you, please, general shout out. I do apologize, but as a matter of personal protection, I will not respond or engage with any unsolicited messages if I don't know you. Two-factor authentication, again, relatively simple to do. It gives you a reasonable amount of protection, because unless your two-factor authentication has also been hacked, then that gives you an extra layer of protection. I should say, if you are using something like Google Authenticator, make absolutely sure that your authenticator is not being backed up to the cloud. Because you can, unfortunately, if your entire Google account has been hacked and your authenticator has all of your 2FA codes, if you've been using your cloud backup, then immediately you've effectively completely negated the benefit of it. So I've just pulled mine open here. So if you do use Authenticator, make sure that the cloud icon in your Authenticator is crossed through, so you're not uploading those to the web. And then an easy way of backing it up locally is to get a second phone, which I have, and then you can export those locally. So you have a backup yourself. It's just that your backup's not in the cloud and accessible to hackers. And maybe the last thing to say is that if you are, maybe before we sort of move on to more consideration, if you are a Bitcoin holder, then use a hardware wallet, and ideally use an air-gapped one.
What's an air-gapped one?
So something like the Cold Card, for example, has that enables you never to connect your signing device to the internet. So your keys will never ever touch the internet at all. The way that you sign a transaction using an air-gapped Cold Card is you would set up the transaction on software on your machine, and then you create a partially signed Bitcoin transaction, which you save to an SD card. You pull the SD card out of the computer, whack it into your Cold Card. sign the transaction, return it then to the computer, and then you have a fully signed transaction, but your keys have never touched the internet.
That's fantastic.
And
This is
maybe the last thing, if you are a
okay.
Bitcoin holder, never ever have private key material at home.
Okay. Keep it separate somewhere else.
Offsite, yeah.
Yeah. I could speak to you for hours. I mean, there's so many more questions I had, many more stories, but we would love to have you back on the show again. I've learnt so much. I think it would be really valuable for the people watching today, just hearing from you. Thank you so much for your time.
Thank
Where
you.
can people find out more about you and Bitcoin
Sure. So our
Policy UK?
website is simple. It's bitcoinpolicy.uk. I'm most active on Twitter. That is at Freddie New, FREDDIENEW. I do occasionally post on LinkedIn, although I try not to. But thank you so much for having me on. It's been really fun. I didn't realize the time, but it had crept away from us.
Well, time flies when you're having fun. So, yeah. Thank you. All right. Well, that wraps up today's edition of the Roxom Report, coming to you from London. A big thank you to our guest, Freddie New, for joining us. Now we're handing things over to the RoxomTV team in the US to do a deeper dive into global events and consciousness. Next up, it's The Great Awakening with Nolan. We'll be right back on Monday with more Bitcoin and the latest news in financial news. Sorry, I'm all over the place right now. Thanks again. Thank you for watching and see you soon.